Hello YouTube, this is Jerry D from Tennessee coming at you again. I'm a crazy old man in Tennessee talking about stocks. First, I'd like to say I am not a stock advisor. I am not a financial advisor. I'm just an old, crusty old man, lonely old man in East Tennessee talking about stocks and just talking about what I'm doing with stocks. And I just want to, let's get to the point. Let's just talk about what if maybe you got a big win off of a penny stock. You had a big chunk of money that you come up with. You just had this chunk of money that you had that you wanted to invest. And you really didn't want to risk it in these high risk penny stocks, but you want it to generate income for you for your retirement, monthly income. So I've been looking at some stuff, say like if you sold a classic car for $20,000. Now, it doesn't have to be $20,000. It could be $10,000. It could be $5,000. But my point is, you can take some money and you can make this money generate you some income. And this income will be more than what the banks will give you on interest at the bank. So, on your savings account. So, let's take a few stocks and look at them. And I'm going to show you some dividend stocks I'm looking at personally that look like they may be a long-term hold. And then I'm going to talk about what you can do with this investment and to make it generate you even more money. So, my first stock is CRT, Cross Timbers Rarity whatever Trust. Okay, so Cross Timbers. Let's just call it Cross Timbers. It's been a long day. I've been working on computer stuff all day at work. So anyway, so this stock is a monthly paying dividend stock. If you look here, it is a monthly dividend yield of 7.19%. You're not going to get that on interest on a savings account, okay? So I'm looking at alternatives to letting the money set in a savings account. The bank's using your money. They're not giving you much. They might give you a little bit, but they won't give you as much as what this dividend stock will give you. So what this dividend stock will do, it pays out monthly. So if you go out and you buy, say if you were going to put the whole $20,000, I don't suggest if you had a big chunk of money to put it all in this stock. You might want to split it amongst all three of these stocks would be your best option. That way if the price of the stock goes down, maybe all three of them may not go down. One may go up while two goes down, or two may go up while one goes down. You're kind of diversified. So you're not taking a loss on just one stock and losing, money off of one stock investment. You've got multiples, and maybe one or two of them may carry the other ones that are down over time while it's going on. But all stocks will go up and down. As you can see from the chart here, this stock has been down and it's on the rise up. Okay, so this stock is paying out 9 cents per share every month. This is monthly, not quarterly. A lot of stocks pay quarterly. I'm looking at monthly dividends. You get a check every month, okay? So, for instance, if you want to take and you want to get 7.19% on your money on $20,000. Let's say if you did put the whole $20,000 in this stock. $20,000 divided by the $12.70 ask price. Okay, that's what you're going to end up paying to get into the stock if you want into the stock. You could set a bid, but you're going to sit there and you're going to have to wait for somebody to drop the price to get into it. if you want to help the stock, always slap the ask price, okay? So $20,000 divided into $12.70 a share will give you 1,574 shares. Those 1,574 shares times 9 cents a share that you're going to get paid out monthly is going to generate you $141.73 monthly dividend, 7.19%. Okay, over the course of the year, that $141.73 times 12 months, this is a monthly dividend stock. For 12 months, it's going to pay you $1,700.78 for the whole year. That's not, your bank's not going to give you that much money off of just your interest. I mean, a lot of banks right now are just giving maybe 0.5% or something on the money. But some of them might be giving 1%. But you're really going to really get more gain in investing in something like this and finding a stable stock that you can just drop your money in. And you need to keep an eye on your investments and what they're doing, because you might, if it starts going down, you might want to move your money into another investment, another dividend stock that's on the rise up while this one's going down, and vice versa. But over time, if you just stay in it, your dividends is getting paid out will offset the price of the stock going down. And over time, if you're buying into the stock as the stock is going down, well, we'll get into that a little later. Okay, I'll get into that here at the very end of the video, but I'll show you a way to where over time, if you just let it sit like you would in the savings account, how it will really grow here in a few minutes. So, all right, so let's move on. So this one, we've already determined this one will pay $1,700.78 for 1 year to let it sit with 1,574 shares. That is off today's date. This is September 14th, 2021. 2021, September 14th, 2020. That's the price at closing today. So, let's move on. The next stock, PSEC, Prospect Cap Corp. All right, so it's down a little bit today. You can see it's on the trend down, so might be a good time to buy into it because, like I said, stocks go up, they go down. It's a NASDAQ stock. It's $7.69 a share. This one pays out a monthly dividend as well, but 6 cents per share. Now, it's a cheaper stock, so you're going to get more shares. So 6 cents per share is paying out at 9.35%. So it's paying more of a percentage on the dividend than the previous stock. Now, the higher the percentage, the higher the risk of the stock is going to be. So you got to keep that in mind. And again, I would keep an eye on these investments if you do choose to get into this. So PSEC, if we invested $20,000 in PSEC, it's $7.70 ask price will give you 2,597 shares. The 2,597 shares at paying 6 cents a share will give you $155.84, which is just a little bit more monthly dividend than the other one, which is 9.35%, almost 10% on your money. So, the 155.84 times 12 months will give you a total of $1,870.12 for 1 year of investment, just to sit there for 1 year. That's not bad. I mean, like I said, that's more than your interest on a savings will give you. I think that's probably more than a money market or a mutual fund is going to give you on just a regular bank account. So this one's a little more payout, $1,870.12. Again, you may not want to put the whole chunk into one stock. You might want to split it up between all three if you were going to do this. And I'm not telling you I'm not telling you to buy into these stocks. I'm using these for investments. These are stocks I am personally looking at myself. Again, the higher the percentage on the payout, the more of a risk the stock is going to be. So let's move on to the third stock I have. AGNC Invest Corp common stock. It's $15.98 a share. It pays out 12 cents on a monthly dividend. You can see how it's choppy, it's up and down. It pays out 8.96%. So 12 cents per share. So if you invest in the whole chunk, 20K into it at $15.98 for the ask price for the day, on September 14, 2021, you would have 1,251 shares. So 1,251 shares will generate at 12 cents a share, $150.18 monthly dividend, which is 8.96%. Over the course of the year, the 150 times 12 will be $1,802.25 for the year. Now, if you want to generate more than this off of these stocks, even if you split up between these three stocks, here's a little trick that you can do. I'd say just about all the brokerages will allow you to do this. There's a thing called DRIP, the Dividend Reinvestment Program. Okay, DRIP. It is a setting that will be on your brokerage account when you open up the account. So, if you turn on the dividend reinvestment on your account, most brokers call it DRIP. All right, you will compound the growth of your money. With DRIP, you have the potential to gain 18%. This is how people, they say, oh, you can get 18% on your money. And a lot of people don't believe that. But over time, what you're doing is you're taking your payments, okay? DRIP takes your payments and buys more shares for you. So every time that payment drops into your account, the brokerage, if you have that flag turned on, will go and buy whatever that payment, however many shares that payment can buy on your account. And some brokerages will buy partial shares, so they will reinvest the whole amount of that money. If it's 151.18, it'll take that 151.18. The last share will be a partial share, and then you will gain whole shares as time goes on. But this is just an option you can do. This is how you can really gain on your money over 10 years or more. You can more than double your money by doing this. You can maybe triple your money, depending on how the stock performs. The dividends can change from year to year. When the companies release their financials, they may change what they're paying out on dividends based on what their previous income was for the year. If they're down for the year, they may drop the dividends that they're paying out to the people. If they're up for the year, they may increase the dividends that they're paying out for the year to the stock investors. It just depends on the company. It pays to pay attention to the financials and stuff when it gets released to the SEC. You can go out on NASDAQ, SEC. Usually PR Newswire will tell you, your brokerage will tell you, down below your portfolio will tell you the news that's released for each of the stocks, if they release financials or whatever, if they've changed their dividend payout. There'll be a little blurb down at the bottom of your portfolio and tell you which ones are changing what. You just need to pay attention to that when you buy into this stuff. But this is a quick way, like I said, if you sold a classic car, you had a chunk of money, Like I showed here at the first, the 65 Mustang, you got $20,000. Oh, what do I do with this money? Well, an option is you can let it sit in a savings account. You can do that. That's probably your safest bet, but the banks are not going to pay you any dividends, or they're not going to pay you a whole lot of interest. They may give you a little bit of interest, but they're not going to give you a whole lot for letting your money sit there. Certificate of deposits may pay you a little bit more, not much more, but just a little bit more. If your bank offers like a mutual fund account that you can roll your money into, it's like another account that gains a little more interest than a regular account. You know, it may gain a little more, but you're not going to get any gains like you can with a dividend stock like this. It just won't happen. So that being said, I just wanted to bring this out. I've been looking at some of this stuff. I'm looking at ways I'm just looking at creative ways to grow my money, because I don't have much longer. I might have maybe 10 years and I'm ready for retirement. So I'm looking for some of the safest. Now, the penny stocks, some of the penny stocks aren't so safe, like I've talked about in some previous videos. But I'm looking at a few more conservative ways to roll money in and to increase what I have in my nest egg for retirement. Now I'm going to have state retirement, so I'm going to have decent retirement. It's not going to be the best in the world, but it's not going to be too bad either. It should be a decent. I should be comfortable, but I'm trying to increase as much. The more you can put away. My point is, the more you can put away before you retire, the better off you're going to be over time. It may hurt to begin with, but as you start putting away money and start telling yourself, I don't need this stuff. That's the one thing our country's bad about. People wants to buy stuff. I got to have that boat. I got to have that motorcycle. I talked myself out of the motor. I sold a classic car, and I almost bought a motorcycle, and I just told myself, Jerry, you don't need that motorcycle. You're getting older in life. I had an uncle that got killed on a motorcycle. The older you get, the harder it is to heal off of injuries. Like, nah, I don't need a motorcycle. I need to take them, drop that money somewhere, sit on it for the next 10 years, and just don't forget about it. It's what I need to do. And maybe you're in that situation too. I thought I'd bring this up. But this is what you call dividend appreciation. It really is. This is what you call dividend appreciation. Because when you start taking and you let your brokerage reinvest your dividend payments over time, you're buying more shares of stock. Your monthly payout, because you have more shares, are going to be more each month as they go, especially if you're buying monthly dividend stocks. That's what I like about. That's why I like monthly dividend stocks, is because you get that money every month. You don't have to wait 3 months for your money like a quarterly dividend. Some pay yearly. Some will only give you a check once a year. So you can pay attention to the stocks you're looking at and see what they're producing. You can run reports on the brokerages. Most of them will have stock screeners, and you can search for monthly paying dividend stocks. Or if you just want quarterly, or you can say, I want dividend stocks that pay a certain percentage. Again, the higher percentage, the higher the risk. Your money, you've got so many shares of the stock. The price of the stock can drop, and you're going to lose value of your money if it drops. But if you hold it over time, or you're buying as it drops, they're paying out your dividends for your number of shares. So you're buying more shares. Even though it's dropping, you're gaining more shares. So those new shares that you're gaining is canceling out the drop in price over time. And if it goes up, you're really gaining on money because you got more shares and the price is going up, and that's really going to multiply how much it's going to take and really grow your investment in a really, really, really good way. So the mechanics, once you look at the mechanics of it, of what it will do over time, you can set in for a year, and you can probably just take like today's calculations, and you can say, well, what if I got $150 and I bought 100 and I had dividend reinvestments, and I had the brokerage go ahead and automatically buy $150 more shares. I'd have this many more shares, and this many more shares will pay me out this much money based off of this dividend payment. It's going to grow over time. It's going to grow a lot more than the savings account. So I just thought I'm just here to help teach people. I'm learning as I go. I mean, I learn every day. I don't know everything about the stock market, but as I'm getting older, I'm looking at more creative ways to invest my money, and just trying to be smart with my money. That's all I'm trying to do. Trying to be smart with my money. So trade cautious, trade scared. Do your research on this stuff. Don't just buy. I'm not saying to buy into these stocks, but you might want to look at these 3 stocks that I just mentioned and form your own opinion. You might put money in all 3 stocks. You may only want 1 or 2 of these stocks based on what you see. And your brokerage will have, like, when you look at the stock, there'll be like recommendations on what type of stock this is, if it's a strong hold or a moderate hold or whatever, and there's explanations. It pays to go look at the tools, look at the education that your brokerage gives you. Like E-Trade, you've got a learning center on E-Trade, and they teach you about the dividend stocks, how they work, the mechanics behind it, kind of like what I'm trying to do here. They'll go in more in depth. They'll teach you options if you want to do options. I'm afraid of options because options are very, very, very risky. This is a more stable way to invest your money and going into the dividend stocks. But again, anything dealing with stocks, you can lose money. So pay attention to what's going on with the stock. Always keep an eye on your portfolios. Always keep an eye on what it's doing, because if you catch things ahead of time, if the stock starts dropping, there's bad news. If the company becomes financially in trouble or something like that, it might be best to get out of the stock, move out of that stock into another stock that's stronger, or it's on the uprise on the price of the stock. So it pays to pay attention. Okay, pay attention to what the stock's doing, on what the company's doing. Are they transparent? Every time they come out with news releases, they release financials. Glance over them. If you don't go over it, like nitpick, detail, at least glance over it. Make sure everything looks good. It's the best policy. So if you're going to do this, pay attention to what you're investing in. Keep an eye on it. Keep track of what the company's doing, any news that's going on concerning the company, and that will help you succeed in your investments. So anyway, thank you for joining me in this video. If you're not a subscriber, I'd love for you to subscribe. If you hit the notification bell, you will be notified when I come out with more videos. If you click the thumbs up, like icon, it will push this video out. This will push this information out for more people so they can learn about this stuff as well. I'm trying to grow my channel. I'd like to hit, by the end of the year, I'd love to hit 1,500 subscribers or more. I don't know if that's realistic or not. I'm over 300 right now, but we'll see. But anyway, thanks for visiting Jerry D in Tennessee. I'm just a crusty old man in Tennessee talking about stocks, and I hope to see you in the next video. I hope you have a profitable week. Hope it's a good week, and hope this next weekend's a good restful weekend. Do something fun. Stay away from the virus if you can, but just enjoy life and keep what's important. So hopefully we'll see you in the next video, and I hope you have a good night. Thank you. Bye. Hey, thanks for coming by. Glad you checked out the video. I hope you liked it. If you like it, please click on the like button. And if you're not subscribed to the channel, would like to invite you to subscribe to my channel. May God bless you, and I hope you have a good day. Bye. Bella's got to be right up under me, don't you, Bella? Oh my word. Cloudy day, looks like it may rain. Clouds out over the valley. East Tennessee Valley. And Bella, she's just happy to be around.